Sorry for the delay. It appears that my MacBook, the actual plugin didn't work. So I'm gonna do a very abbreviated version of this talk so that the panel is ready. So basically, I'm covering a number of Web3 projects that are working on, one, reducing carbon emissions, but also getting to the point where we can actually remove 1.5 trillion tons of carbon. So let's just set the scene. Let me make you all depressed a bit. In 40 years, an area the size of Europe has been deforested. At this rate, the world's rainforests will be gone in 78 years. Let's hope that doesn't continue. And then a report from the UN estimated that dozens of species are going extinct every day, with as many as 30 to 50% extinct by 2050. 21.5 million people have been displaced by climate change-related disasters since 2010, and on average, every month, we eat one Lego of plastic, which is about 44 pounds in a lifetime. So what's happening on October 31st, or in about a week and a half, is a lot of people, 20,000 in total, are gonna meet in Paris, or actually in Glasgow, to discuss the Paris Agreement's 1.5 degree target reduction. But very few countries actually have policies in place to hit those targets. So people estimate voluntary action through the carbon markets will need to increase by 15-fold and even 100-fold by 2050 from the existing 2020 levels. So how do we actually get to negative emissions? Well, for every carbon ton we emit, we need to remove 1 carbon ton, and then we need to actually remove 1.5 trillion tons by 2050. So it actually is not simple. Here's some estimates that McKinsey presents, but in all, we are not on the right track since we're emitting about 40 billion tons or 40 gigatons of carbon dioxide a year. So if it's business as usual, I guess we'll have to see what happens. But if we actually want to hit those goals, we need to be removing 1.5 trillion tons by 2050. So yeah, this would have worked, but it was a GIF. It's a nice visualization of what 1 metric ton looks like. 1 metric ton is about 33 feet in diameter. So it's essentially a big ball. And if you were to imagine 50 million tons, which is what New York City emits in a year, as an image, it would essentially reach the clouds and cover all of Brooklyn. You'll have to check out the video on your own. But there are ways in which Web3 is already approaching these. And these methods actually align with a lot of carbon reduction methods. So 1, you have voluntary carbon markets. 2, you have reforestation and afforestation. So, where there's forests removed, adding forests, and where there aren't forests, adding forests. And there's also regenerative agriculture. And then finally, something I want to talk about, which is a recent trend, is green currency. So starting with voluntary carbon markets. First, it's worth knowing what a carbon credit is, but it's a certificate that represents the quantities of greenhouse gases that have been kept out of the air or removed from it. So 1 carbon credit is supposed to equal 1 metric ton of carbon dioxide. Granted, not every carbon credit is created equal, and there are some better carbon credits than others. But it's traded on an open market, and there are a number of different markets. The current weighted carbon price right now is about $35 and has been increasing pretty much steadily since about 10 years ago. And there's actually a lot of benefits. So the reason why I'm talking about voluntary carbon credit markets is because the other option would be a carbon tax. But let's talk about voluntary markets because, 1, they're actually a way of infusing private capital into things that benefit biodiversity, pollution prevention, public health improvements, and job creation. And it's also been increasing, at least 20% in 2020, and it's a $272 billion market. However, some would argue that a lot of the carbon credits that are trading are just going back and forth and they're never retired. So I'll tell you a little bit about retiring in a second. RED+, this is just an acronym for reducing emissions from deforestation and forest degradation projects. So it actually is missing the F. But Red Plus accounts for about 53% of total issuances and retirements. This is an example of, it's in the state of Acre, Brazil, and it's an example of a red carbon credit. There are some problems though. So the market is characterized by low liquidity, scarce financing, inadequate risk management services, and limited data availability. So there are two main standards of issuing carbon credits. There's the gold standard and Verra's VCS. Verra represents 3/4 of all carbon credits issued. Gold standard another 20%, and then there's some other issuing bodies. However, what happens is a lot of CO2 certificates trade hands many times, and even a lot happen off book. And then some are purchased to add to a balance sheet and then never retired. So according to McKinsey, you can see from this chart, actually only half of carbon credits purchased in the last year were retired. So let's say you're an oil company and you want some positive PR. You could purchase a ton of carbon credits, not retire them, add them to your balance sheet, and then sell them later if they increase in price. This isn't actually solving a problem. This is actually what Gold Standard's registry looks like. You can, select issuances, retirements. You can go by the vintage, the quantity, the type of project, the issuance date. And you'll notice that there's not a lot of information on some of these, and some of them don't even actually have enough environmental monitors checking them. So why Web3? One, it can solve a double counting problem. Anything that is issued as a carbon credit or a token, really, on Ethereum, if it were to be retired, it could actually be burned, and that would be captured on chain. These, I'm here at an Ethereum conference, so I don't need to go too much into this, but anyone who's played around with yield farming mechanisms understands that, with rewards, you incentivize a lot of activity and liquidity. And the other great thing, though, is you can create through an ERC20 contract or something else, standardization or standardized carbon credits, which are tradable. Right now, carbon credits largely exist, either through Verra, but besides that, there isn't really a standard that is globally traded. And then finally, with open source software and composability, you can build upon other ideas that people have come up with before you. So I heard actually folks from the Toucan protocol are here. I'd love to speak with you after. But Toucan protocol recently, just actually on Monday, launched a carbon bridge. And so they're using Polygon Network, which is an EVM compatible sidechain, whatever your semantic preference is. But what it does is it allows people to port over their carbon credits and tokenize them on Polygon. Currently, they're only offering carbon credits from the Verra registry. But in the future, they're going to also offer the gold standard and other registration bodies. But what it also does is it enables you to pool these tokens and create price discovery. So their first pool is actually called BCT. This is an example of what it looks like. But yeah, so you can actually start moving your carbon credits that exist on registries over. And so they launched on Monday. This was from a couple hours ago. They already have 6.3 million tons of carbon now tokenized on Polygon. So they've really, they basically use BCT as a base carbon ton. And so 1 carbon ton equals 1 BCT. But it's pretty amazing. So in a couple days, 6.3 million tons are now issued on Polygon and Ethereum, which is 12%. Remember that picture I showed you earlier? That's 12% of New York City's annual carbon emissions. So it's not insignificant. And now you have to ask, why is all this being bridged over on the Toucan protocol? I was actually speaking with someone earlier who mentioned that a lot of it is to earn rewards from another protocol and application called ClimaDAO. I also think there might be a few Klima or ClimaDAO folks in the crowd. I'd love to speak with you. But what they do is they are essentially creating these pools. So there's a Klima BCT pool, there's a BCT USD pool, and for staking or bonding, you can earn Klima rewards. So it's a pretty, flagrant, transparent DeFi idea of how do you incentivize liquidity? You offer yield tokens and reward. But the idea is that you're going to earn compounding interest, and then long term, if you're holding Clima, which is backed by carbon, you're also benefiting from the increased pricing of carbon credits. And as I showed you earlier, carbon credits have been going up over time. It's a pretty simple DeFi interface. You connect your MetaMask wallet or use Wallet Connect to connect to Polygon network. You can redeem the Clima bond carbon, which is BCT, from the Toucan protocol, or you can stake Clima. It's really awesome. As of today, you can now get Clima on SushiSwap and, yeah, essentially start staking Clima right away. So I want to talk about number 2 is reforestation and afforestation. I think I have like maybe 2 minutes left, so I'll be quick. One example is Rewilder. So this is a project that is essentially, instead of working with voluntary carbon markets, they're like, let's just use money to buy land in Brazil. And so they're selling NFTs. The NFTs are available as of this week. You can buy them for a minimum of 1 ETH all the way up to 30 ETH. And what they do is they give you a portion of this land that they're going to buy. They estimate that, 25,000 DAI will give you a small hectare of land in Brazil. It's also a nonprofit entity, and then they're using some of the funds to basically pay for rangers to make sure that the land is actually being protected and there's no, deforesting going on. Another great example is Nori. So Nori is, they just raised another $4 million from Placeholder Ventures, but their plan is to actually focus on croplands and cover crops. So here's an example. A farmer provides an operating data to Nori saying that they're using this methodology, which could actually reduce 4.8 gigatons of carbon dioxide annually. It's then verified by an independent third party. And then once that's verified, it goes through further verification through a USDA-funded tool. It's like an open source software tool to determine the soil organic carbon content. And then Nori issues a certificate based on the amount of CO2 they sequestered, and it's called the Nori Carbon Removal Tons, or NRTs. And then the NRTs are sold for Nori. So it seems a little complicated, but it essentially involves a person, claiming that they've used a farming practice that reduces carbon, getting NRTs in return, and then swapping those NRTs for Nori, which can be sold for cash. Here's an example of the carbon removal. It includes 16 NRTs, which can be sold on an open market for 16 Nori tokens. I'd be remiss to not mention my own project. So I'm also working on a DAO that is essentially giving street trees in New York City an Ethereum address. You can read about it more on jamesbeck.mirror. But yeah, it's an open source map that each tree represents an Ethereum address. Time is up. One final closing note. So a number of projects, especially stablecoin projects, are talking about how they're using carbon credits and also repurchased and rewilded land to back stablecoins. So Cello is entering the X Prize competition. It's a $100 million prize by Elon Musk. And they're actually intending on having 40% of the Cello reserves to be backed by carbon credits. MakerDAO, Rune Christensen recently had a proposal, and he made it, was a case for clean money. It's a long, winding post, but 2 things I found interesting is that they're going to be using projects like Centrifuge to use real-world assets and safe, productive, climate-aligned assets, or, for example, corporate bonds. They also, have talked about ideas of backing DAI with status signal NFTs that represent these climate-aligned assets. So I'm going to skip through, but I just wanted to have one closing notes. So money is pretty abstract. I'm here in the Ethereum community because we get to think about money every day. But this is kind of a call to think about how we embody the money we transact with daily and what backs it and what represents it. Thank you. You can read this post in more detail, jamesbeck.mirror.xyz. Follow me on Twitter. I work at Consensys, so if you have questions about MetaMask or Infura, I'm also happy to talk. Thanks, everyone. And thanks to the organizers.